First of all, let me give a quick recap of what is happening currently in market and what is expected. Now, before I even speak out my heart on the same, I want to make a disclaimer right at the beginning that all this information, whatever I'm providing, is based on my experience and my knowledge. Please do consult your financial advisor and take a decision based on what suits you the best. This is just my view and my perspective. Now, first of all, the fall in market started from October 3rd. Let me tell you, the fall from October 3rd, whatever we have seen, is majorly because of one reason, that is valuation. And if you ask me what is this valuation, very simple. FIIs started selling our market with a valuation concern, and from October till now, if you see the entire sell-off, FIIs have sold close to over 3 lakh crores, and it's not a small money. In fact, let me tell you, the number one reason why market fell is not because of FII selling, but it is because of the valuation of Indian market. And if you ask me, can you explain, Rudra, this bit more? Very simple. To understand one most important point, do remember valuation was the number one reason why market fell post September. And let me make this very strong statement. Always remember, stock prices are slaves of earnings. I repeat again, stock prices are slaves of earnings. Now, why am I emphasizing on this statement? Come whatever macro variables, let it be inflation, GDP data, interest rate, budget, what is Trump doing in America, his policies, his tariff, whatever you want, you take all the data and you keep it on one side. And on the other side, I keep only one data called earnings. So over a long period of time, if you see, our Indian corporate earnings are growing on an average about 15% per annum. And if you see even our stock market growth, it is 15% per annum. So on an average over a long period of time, market gives you this 15% return per annum, which is same as the corporate earnings growth rate in India. And let me tell you, when I made this statement, stock prices are slaves of earnings. That means keep aside all other factors on one side. It is the earnings of a company which should take the stock prices higher. So it is very important to ensure that when you make investments into stocks, especially, you will buy companies which have good earnings. It should not have just earnings now, even the visibility of earnings for the future should be great. And always remember, any stock price is determined based on two things. One, earnings, and the second one is the P multiple. Now, what is this P multiple or price earning ratio? So, for example, right now, if you see, if you think all the Nifty 50 stocks earnings put together, example, I'm just telling, is about 1200 rupees. So if 1200 rupees is the earnings, even if I give a P multiple of, let us say, 18 times, use your calculator, 1200 is the earnings expected for all the 50 stocks of Nifty, multiply it with a P multiple of, let us say, 20 times. So 1200 into 20 times, if you do, it is 24,000. But Nifty now, if you see the number, it is somewhere at around, let's say, 22,200, 300 kind of a stuff. So even if I give 1218 P multiple, 1200 into 18 times, that is somewhere at around 21,600. 18 and a half times if you do 1200, so that is coming somewhere at around 22,200. So right now we are trading at around a P multiple of 18.5 times. Now, is it on a long-term average a cheap valuation or a comfortable valuation? Definitely yes, sir. But when you were at 26,200, that was the peak of market. And if you take the same earnings, so there the P multiple was expensive. But not only that, look at mid and small cap. The valuation was so absurd. The PE multiples of many mid and small cap stocks was trading at 80 times, 100 times, 150 times. And unless you have growth in earnings to that extent of 120%, 150% and all, this PE multiple has to get derated. Do remember, if a company is growing at 15% annual growth rate, then you can give it a P multiple of, let us say, 15 times, or slightly higher you want to give 20 times. But if you are giving 80 time, 100 time, 150 time P multiple, and if the growth is only 10% and 15%, that valuation cannot sustain for long. It has to correct and come back towards the mean average, and that is what you saw post October. And yes, when FII started selling in a huge way, also one more factor which made FII sell was their dollar and rupee rates. If you see, from that stable price of around 80 rupees, 82 rupees, we went even up to 88, 89 rupee for every dollar. And whenever an FII makes an investment, he has to convert his dollar to rupee, and rupee is what is invested. His stocks were falling, and when he has to take back the money after he sells his share, he should convert back again his rupee to dollar. And when he invested $1 was at, let us say, 80 rupee, and now when he is liquidating, if $1 is, let us say, 88 rupees, he is losing 10% because of currency change, that is dollar having appreciated and rupee having depreciated. He is also losing because the stock prices are coming down. And with this ripple effect and this snowball, which just turned into lot more bigger size, and then when you don't have equivalent buying strength in the market at that point of time, yes, what you saw was definitely a bloodbath. And let me tell you, markets move in cycles. And yes, once in every 8 to 10 years or close to a decade, once in a decade, these type of phenomena occur. And once they occur, they will wash out lot of weak hands in the market. And once these weak hands get completely washed out, and all those people who thought making money is so easy in market, and people were leaving their job, and post COVID everyone thought, why to go for job, it is easy to make just money in market and through trading. And before October, any stock you bought, even if it comes down, if you would have held the stock, next 1 day 2 day you will get a recovery in market, and you were considered to be a great investor trader. That was before September 2024. But post September 2024, when markets like this, whatever has happened, which generally happens once in a decade or once in 8 to 10 years, it really swept and cleaned a lot of these people who are all either fresh entrants to market, or who are all thinking market is easy and you can make money doing nothing. And all these dreams completely got battered, and the reality now prevails. And now do remember, always I say, stock prices are slaves of earnings. And what is important is, don't just buy a share because now it is down 50% from the peak, or now it is down 60% from the top. There is no rule that even from here it should not fall furthermore. And let me give you example. Even at current market price, after a 50% kind of a correction, in stocks like, for example, Asian Paint, in stocks, for example, like Tata Motor, they're all blue chip stocks, bluest of the blue chip. And even after 50% correction, 40% correction from the peak on these stocks, even now, valuations are still not comfortable, because if you see their PE multiples, they're still 50 times, 60 times, and you don't still have comfort in terms of valuation. And do remember, there were some companies whose earning visibility is only not there, or companies just growing 5 to 10% every year. Their PE multiples were trading at 120 time, 150 time, 200 time. They're all now coming back to normal levels. And market always provides opportunity to people who understand its cycles very well. And let me now tell you, according to me, even now, mid and small cap valuation is definitely uncomfortable, or still it is higher. No doubt, the correction in market has already given some comfort in valuation compared to what it was in October. But mid and small cap in general, yes, there are some sectors, yes, there are some stocks whose valuation might have become attractive. But in general, still mid and small cap valuation is not at comfortable level. And even at current market price, I will tell, even if FIIs come back to market, first they should come back and put money into large cap stocks. So if people want to invest in this market, your first choice has to be to go to mega large cap and large cap stocks. And I know some people will say, sir, how can you make money, high return, by putting money into large cap and mega large cap? It is only the mid cap and small cap which will give big returns. I agree with you, but do understand the current market environment is very, very important. That means the current market environment in which we are in this market, it is still the large caps which will give you big money compared to mid and small cap. You should not ignore the current market situation. What do I mean by current market situation? This is not a euphoria kind of a market where you can put money into mid and small cap. So there are times when you should put money into mid and small cap, but this is not the time. And let me tell you, normally when market is a matured market and still there is that euphoria yet to come, that is the time where you have to put money into mid and small cap. So right now, even if you are expecting the fall has been too much and you are expecting a big recovery in market, the money has to go towards large cap at this point of time. Now someone asks me, sir, I know some good companies, fundamentally strong stocks which have fallen 40-50%, but they're in mid and small cap. Can I buy it right now? My answer is yes, you can buy, provided your time period from now on, the fresh investment, whatever you are making, your time period is at least 3 to 5 years. And I know many people today say, yes, yes, I'm putting money for next 3 year, 5 year, but after next 3 days, they will be worried and their real time period is not 3 to 5 years, but it will be 3 days. So what I would suggest you is, even now put your money in large cap than in mid and small cap. Let the move happen in large cap. After 3 months, 6 months, slowly you can exit that large caps what you would have bought now, and then you can shift from there towards that mid and small cap once the market becomes more matured. Name some of the stocks, name some of the sectors which can do good, and valuation wise, there is still valuation comfort at current market price. I'll say yes, look at sectors like private bank. So even at current market price, if you see private banks like, for example, HDFC Bank, Kotak Bank, ICICI Bank, these are top stocks with valuation comfort even at current market price. And banks for me, definitely private banks for me, and that too in that large private banks like, as I told you, HDFC Bank, Kotak Bank, and ICICI Bank are far, far, far more comfortable both in terms of valuation and being the large cap ones. This is where you have more comfort in terms of valuation. And let me tell you, somehow I am of a strong opinion. In fact, continuously I was telling, this is not the time to buy PSUs and it is the time to sell PSUs. Yes, till September, the move in PSU was phenomenal. But I'm again repeating, Modi 3.0 government is only because of the strong support which is there through the allies who are part of the NDA, and whether it is your Chandrababu Naidu, Nitish Kumar, all that, it is not like BJP single-handed is having all the powers to do whatever it wants. And definitely, yes, from Modi 1 to Modi 2 to Modi 3, there is that amount of reduction in the strength, whatever he has. You might call it because of incumbency, or is it because of XYZ reason? I'm not a political expert to talk on that. What I can tell you is, yes, be very, very clear. that money first has to move to large cap, and for me private banks are more comfortable and not PSU banks. Even at current market price, if you ask me, force me to buy a PSU bank, then I might go to SBI, but definitely not to any other PSU banks at current market price. And I want you to be very clear, valuation comfort is definitely found in private banks at current market price. And yes, I've named you three private banks. In the same order of preference, I will go for HDFC Bank, Kotak Bank, and ICICI Bank. Okay, so this is regarding sector, regarding stock. If you ask me, I've already told you I will stay in large cap, not in mid and small cap, at least for next 3 to 6 months. More money will flow there. If you want to buy mid and small cap right now, your time horizon should be at least 3 to 5 years and not lesser than that. It is better to go with large cap so that your downside is also more protected and money will first start flowing into larger caps. Even if FIIs come back to Indian market, they will not start investing in mid and small cap. They will still first put their money in mega large cap. Your portfolio cannot be made without the mega large cap. And yes, Reliance and Bharti Airtel will be there along with these private banks, whatever I spoke. And also let me tell you, IT for a very short period may not get back to their previous prices. So I will avoid IT for some time. Yes, it is all because of the AI and also because of competition, not just from US, but from China. And for me, IT is another area where you have to wait out for some more time. Yes, you can do some amount of investing even in autos, which has given enough correction. Yes, M&M is one stock in autos which can still be very, very good. In fact, if you have to pick up even from autos and related area, yes, you can even look at Escorts, you can look at Ashar Motor. So these are stocks which will still do good, and you have to stay with large caps at current market price and at current market situation, and not to go with mid and small cap in general unless you have a longer time horizon. And stick on to private banks, stick on to telecom, stick on to some of these auto names, whatever I told. And you have to be very, very choosy in your sectors and stocks. And I won't be surprised even from here if mid and small cap see further more correction, so that we see valuations in this sector more attractive. And I want you to clearly understand that yes, you will get chance to put more money into mid and small cap, but not at current market price. And then you can shift also from the large cap, what you will be buying now, after some time into quality mid and small cap stocks. Or if you find these stocks with great value right now and you understand the valuation and the sector and the stock well, then yes, even at current market price with a longer time horizon, one can look at even putting money to mid and small cap. So if you ask me, this correction can last till when? So as I told you, I feel yes, it can go on till March end. Let the new financial year start. And by then even Trump, who took his position from 20th of Jan, making a lot of noise in terms of tariff, he will also subside by then. It will also become a non-event because right now it is so strong. In fact, I'm nowhere comfortable with the valuations of US market, especially if you see S&P and Nasdaq, they have gone way beyond control. And Warren Buffett is sitting at cash of his lifetime in his portfolio right now, and valuation comfort is definitely not there in US market. And if US market starts correcting, I don't know when the trigger will come and what will be the trigger, but definitely these high valuation cannot sustain for long. And I still remember it was in July, August when I was also not so comfortable in market, but it kept on going up, kept on going up. July went up, August went up, September went up, and all those people. And many a times I used to say, I used to ask myself, what is this? See the way markets are moving up, and I was just sitting more portion in cash. And see, if your portfolio is very small, let us say you have a 1 lakh portfolio, 2 lakh portfolio, 50,000 portfolio, then you can sell everything buy everything at one shot, or if you have even a 10 lakh or a 25 lakh kind of a portfolio, you can buy and sell like this in the market. But if your portfolio is substantially larger, I cannot take a call where I will sit 100% in cash and exit all the shares. So we have to make switch from one sector to another. We have to only switch from one asset class to another, and we have to shift from, let us say, high beta to low beta, and we have to shift from aggressive sectors to defensive sector, and we have to switch from mid and small cap to large cap and mega large cap, and we have to switch from growth and momentum stocks to, let us say, more a valuation comfortable stock. And this is where the whole change has been made. And let me tell you, it is very, very, very important to understand that yes, you should respect valuation, and you should ensure that whenever market goes to either extremes, that is when market goes up, it will not stay at fair value, it will still go up from where it is to such a high area that euphoria is created, and from there market starts correcting. And in the same way, when market starts even falling, it will not come to one place and settle there. What market does is it will further come down from that place to such an area where that there is so much of panic, there is so much of fear, there is so much of doubt, and it will not come and stop at fair value, it will come much below the fair value. And only when everyone starts throwing their towel down, and that is when market becomes very, very attractive, and that is when experienced people will come to market, and then they will start putting their money. And this cycle whatever we have right now in market, this also has to shift from where it is towards the positive side. So markets have become so volatile, and I won't be surprised, I'm making this statement, I won't be surprised if US market sees a very, very good decent correction like how we saw post September. US markets might also see decent correction. And do remember, if that happens, India cannot stand alone and start moving up when US market, which is the mother of global market, starts correcting.